Right now, home prices are almost as expensive as they were during the pandemic, and yet mortgage rates are at 20-year all-time highs. I personally think it's pretty impressive just how unaffordable home prices are right now. The average single-family home in Santa Clara County is about $1.6 million, and yet the average household income is around $125,000. This means that if I put 20% down on a 30-year fixed mortgage, my monthly payment, or PITI, comes out to around $9,950 a month, and my monthly income would be around $10,400 pre-tax, which is absolutely insane, and I can't wait for the day that I can't afford the 200 square foot garage that I live in now, and I have to move into the tent in the backyard. Anyways, interest rates on the average 30-year fixed conventional mortgage were around the mid-sixes for the past couple months until the middle of April, when we saw rates shoot up past 7%, and they're still climbing right now, sitting at around 7.2% and still going up. As a result, the housing market nationwide has slowed down a bit, with a lot of home buyers choosing to pause and wait for rates to come down. In Santa Clara County in particular, things have been slowing down, but not quite fast enough. In this last week of April, we saw a good number of listings come onto the market, right at 459 compared to last week's 465 new homes. We also saw a proportionate increase in the number of homes going pending, with right around 305. This is notable because in the months prior, we were losing inventory as more homes were going pending than being listed, and now it's switched with more homes being listed than being sold. Last week, the average home sold for 108% of list price, whereas weeks prior, they were selling for 110%. While this is a drop in home prices, it's not very meaningful, and I think we're going to have to wait another week or two in order to see the true effects of the rate hike. This is because most of the homes that went under contract will be closing starting next week, and so I think the data moving forward is going to reflect the fact that home prices are down and the market is cooling down as well. The next big shift in the market is going to happen on May 15th when the next inflation report comes out by the Bureau of Labor Statistics. Depending on the inflation report, we're either going to see another resurgence in the economy in terms of the real estate and stock market, or we'll see a further cooling of the market, which in theory should reduce inflation further. It all depends on where that inflation number comes out at. Even though the increased unaffordability really sucks for home buyers, I think it's much needed to cool off the market and cool inflation, and it's going to benefit us in the long run. Thank you so much for watching this week's housing market update, and I hope you have a great day.